Hey, Scott. Thanks for that intro. Um, as Scott said, I am Sean McLaughlin. I'm with Steve Gomez, and we'll be
Hello.
your co-pilots today. Uh, our trusty friend Jamie is on a little well-deserved R&R, little vacation, so we will be filling in for him. And as such, due to this being kind of an unusual episode tonight, we're only going to be going for about 45 minutes. We're going to run through our curriculum real quick, and if we have some time at the end for questions, we will certainly make that happen.
Hey, let me jump in. One of the reasons we're going to end early here is Sean is going to be hosting a group event in Denver. So if anybody in the audience lives in Denver, maybe chime in on the questions box, and Sean can let you know where the StockTwits Traders meetup is tonight in town. So,
Oh, thanks for bringing that up, Steve. I should have mentioned that. Yes, if you are in the Denver metro area, we run a twice monthly traders meetup. We get about 20, 25 people every event, and it's super casual. It's at a brew pub usually, and it's come as you are. There's a great place to network with other active traders, stock traders, options traders, futures, cryptocurrencies. We've got it all, and it's a great friendly group. And hey, I'd love to meet you. Come on out. There's no sales pitch. There's no nothing
mhm,
formal. It's just a good hang. But anyway, enough about
networking.
that. Yeah, enough about that. That's not what this is about. Let's get into our good old legalese here before we go any further. We have to issue these standard disclaimers. Trade Ideas is a publisher, and you understand that no content published as part of the Trade Ideas trading services constitutes a recommendation. You also understand that the views expressed in the trading services are the author's own opinions, and we hope that you understand that performance data supplied by sources believed to be reliable. The calculations therein are made using such data, and that such calculations are not guaranteed by these sources, the information providers, or any other person or entity. Got that out of the way. Hope that's all good. I know everybody loves reading disclaimers.
Mhm.
So that brings us to Trade Ideas. If you are new to Trade Ideas, I noticed that there are a large number of non-subscribers listening in on this call. If you're new to our group, welcome. Welcome to the community. One thing you'll find if you decide to move forward and subscribe to Trade Ideas is there are a few companies that offer as much access to training and trainers the Trade Ideas offers. Every day of the week, we've got things happening. We got webinars such as this that we're on today. We have live training sessions every day of the week. We also have a live trading room moderated by Barry Einerson, where you get to literally look over the shoulder of an active trader who's using Trade Ideas to trade the markets. And he's a fantastically patient educator who's very great at explaining to you what he's thinking and what he's seeing, and he answers questions about the trading platform as best as he can. He often has 600 or more people in the room, so can't always answer everybody's questions. But Barry's a fantastic resource. I don't know where he finds the power to do that for 7 hours a day, but it's amazing. But in addition to all that, we have the trade of the week, which comes out Monday mornings, I believe, Steve. I think that's right.
Correct.
Okay, and that's a great resource for finding trades for swing trading candidates that Steve has derived from the Trade Ideas technology. And then at the end of the week, we wrap it all up with the Friday support session, 3 hours from 11 to 2 p.m. Eastern, where it's anything goes. You got the whole training team on the call, helping answer your questions and making sure you have a good working understanding of what you need to know. So to sum it all up, there's lots of ways to get help with Trade Ideas. We understand that trading software, any trading software, whether it's your trading platform or execution broker, all that stuff can be complicated and can be overwhelming the first time you log in, and we understand that. And so we make ourselves as accessible as possible to help you get up to speed quickly. And moving on, here is our curriculum for today's class. We're going to start off a little market recap. Steve, who's on the call here, he's going to kind of give you his market observations and what he's seeing as far as directional bias and what Holly is telling us. And And then we're going to kind of go off script a little bit this week since I'm here. I'm going to help, we're going to talk about using Holly for swing trading, which I think might be an interesting topic for some of you. So without further ado, I'm going to pass the ball over to Steve, and
Sure.
so let Steve kind of take over.
Red Rover.
Change
Send
presenter
screen
to
share right
Steve.
over.
There
All
you
right,
go.
that'll work. Okay, so let me. All right, you all should have visual on my screen right now. What I'm going to do is I'm going to pull out S&P 500. We look at the spiders as an ETF. And interesting to note, if you didn't notice that I added the 200-day moving it in play. It's everybody's talking about. And in later in the week, we kept touching it again, a little bit of a bounce. And then today, I kind of actually thought that the S&P spiders were going to suck back up and close just barely above that 200, because it seems like the markets and the indexes always kind of have a bogey in mind or a target they shoot for, but it didn't get it, and it ran out of time. The bell rang. S&P 500 index, along with the spiders, officially is now closed below the 200-day moving average, and that has not happened in a long time. If I go around the horn here real quick, you'll see that's not quite the case for the NASDAQ. Here's the 200 on the Qs, getting close but didn't touch it. The Dow, however, was flirting with it pretty hard today, but zipped right back up and closed above it. You'll hear me talk a lot about closing prices really are what matters on a daily chart when it comes to trying to assess, moving averages. There's that Russell 2000, which barely closed above after a couple of threatening moves there. So 3 out of the 4 indexes actually were able to close above the 200-day moving average, but what I'm seeing here is, kind of like an old Bugs Bunny cartoon, hanging by 2 fingers on the ledge, and quivering and just looking for a reason to try and hang on here. But the big news is it is official. The S&P 500 did close and post a close below its 200-day moving average. So that's why I added that average to kind of orient you guys there. That's one thing I want to call out. In the past couple webinars, I talked about how beautiful the uptrend was coming into the early February. Moving averages were stacked. I keep my charts really simple moving averages. I like a 10, a 20, and a 50. Usually I don't have the 200, but I'm popping it in here now kind of for educational purposes. And that's all I really like. And notice how they were stacked, the 10 above the 20 above the 50 on the way up. Then we had the big break, and we had volatilityville back and forth, and we had chopping, moving averages, twisting, tying knots. But all of a sudden, the last 6 or 7 days, we seem to be on the other side of the mountain here, guys. The moving averages are fanned out and they're stacked in the invert. The 10 is below the 20 is below the 50. And not only that, the 10-period moving average, which I refer to as the momentum line, or the guiding hand that pushes a momentum down or up, is basically suppressing the price. We did not get a lot of bounces. Let's go around the horn here and see how many indexes got above this declining 10-period. Well, the spiders didn't. What about the Qs? The Qs got held up right here, very obviously, and haven't even gotten close back to it again. So they're out. IWM got close on Friday or Thursday of last week, but rejected. Not even close again today. And what's our last one here? The Dow. The Dow, ooh, great example in the Dow. Look at this, 3 days where we actually touched or pierced the declining 10-period moving average, only to fall back down into the range. Guys, this is not bullish. This is starting to look to me like the other side of the mountain. And when you start, talking about the S&Ps closing, below their 200-day, these are all chinks in the armor and slow blocks that are coming out of the wall that kind of held this market up for the most part. I also want to show you the one and only indicator I really ever used on my intraday chart for 2 decades now is a 15-minute chart with a momentum line. Again, the 10-period SMA. And I think, if I recall correctly, Newton's law, objects in rest tend to stay in rest, and objects in motions tend to stay in motion. And that's what I kind of consider momentum. So when momentum continues to stay in motion, look at how the little hiccup here in the spiders, even on the 15-minute chart, this 10-period moving average is the guiding hand that is pushing the price back down. And then, of course, the settling up at the end of the day and popping that in there. How do we add indicators? You don't need to have permission. Everybody can have an indicator if you have a subscription with us. Dayan, basically, you want to make sure you're on the beta version. not the production version, so like 4.2.8 I think it is. And you'll know that you have the ability to do those indicators by right-clicking in any chart, and you'll see indicators right here. So I could go and I could add even another new simple moving average if I wanted to. And you'll notice, there are also RSI, EMA, and VWAP, which a lot of people like. And so, yeah, you're only on 4.2.5. Go ahead and uninstall that, Dayon, and then go back to our website and scroll down past that production version, and you'll see the beta version, and you'll have access to some new cool charts. But back to the, my magic indicator. I like price action, I like pivot lines, support, resistance, trend lines. But when it comes to an indicator, the 15-minute chart, 10-period SMA is really the only thing that I want to use. Let's take a look at how the Dow fared intraday with that. Same thing. Object in motion stays in motion, and right here it tried to get above, but that moving average declining kind of threw the prices back down, and then all of the indexes at the end of the day kind of popped back up and basically signaled to us that the momentum was over. So when the intraday price pops back above these declining momentum lines on the downside days like today, that pretty much signals the momentum is probably over. And it works the same for the upside as well. The IWM had a little bit of choppiness here just above it, but got thrown back down below it. And I think the Qs even tried to break above it midday as well and didn't get far. They got thrown back down. So that's what I really like to do in terms of keeping it simple, looking at my 15-minute charts using only a 10-period simple moving average. So bottom line is, guys, this market does not look healthy to me. Maybe Sean will disagree, but he's got some time to talk later if he wants to show any other of things that he may have caught. But from my perspective, it feels like we're on the other side of the mountain. When these moving averages, like we had so beautifully stacked on top of each other on a nice bull market, we had a volatility month, everything twisted up, and now we're coming out the other end where the moving averages are stacked invertedly upside down, and the 10-period sloping downward is forcing the price of the high end of these candles. As long as this kind of intraday or daily action continues, and that 10-period moving average is the guiding hand that keeps price oppressed, it's not very technically strong. I don't have another way to put it. Real quick, let me just check in the VIX. I would like to see, people were definitely buying some more premium today, protection today. It's not really easy to look at these daily charts and get much out of it, but other than the fact that the VIX was very strong today, as stocks were very weak. That's my market recap. And I want to go into something quickly before we go into Holly. I've got a couple of things I want to talk about on Holly. So I'm going to go back to, here we go. So I want to talk about, some of the early indicators in the morning that Trade Ideas can help you guys with, to see maybe what's going on underneath the surface of the ocean, what's happening underneath the water. Well, one of the things I've been doing a lot recently is I took our extreme volume alert, which is a multi-strategy window, only focusing on stocks that are in high momentum and high volume type moves, and then compare them. How many are going to new lows on high volume and high momentum, and how many are going to new highs? Well, I think this was an hour into the open, I believe, and this reading right here was just telling us, if you want to be a dip buyer today, you're really fighting the tide in terms of the momentum stocks. So that was one thing to take a look at. And then I'm going to go live to Holly in a second, but I took a screenshot again here. Nothing but shorts were coming out of Holly today, which is probably one of the first times in a long time that we've seen only short positions come through the AI. Here is our complete closed list of trades today. And you'll notice coming into today, first thing I always do is, what are we coming into? Well, woke up this morning and Holly had a bunch of longs and only one short strategy. Well, this is the parent window, which means that these were the strategies that made the cut last night, going through the tremendous back testing that our AI does, or machine learning, and then dropping those scores into out of sample data to make sure that we're not curve fitting and getting a good score. Well, the ones that, win percentage is a score, profit factor is a score, and you can even sort those coming into the day. Looks like the short strategy was third from the top in terms of the scoring last night. But that was my observation. Oh, wow, only one short. Interesting. Okay. Well, the market opens, and then all of a sudden, let me sort these by trade time. We start getting a half an hour after the open, and then 32 minutes, and then 34 minutes after the open, we get 3 quick short sells. Knocking on resistance is the parent short strategy up here. So the AI being the coach and these being the players on the bench saying, put me in, coach, Holly, the AI coach, is only going to activate these triggers of these strategies if everything lines up and all the filter criteria line up. And so what it told us today was there was no reason whatsoever to even think about being long. And I say that because the AI Holly is more than just an individual trigger mechanism of every single stock individually here. What's the bigger picture? What's going on today? Well, the directional bias was saying there was not one statistical probability throughout today where the AI figured that going long was going to be a statistical benefit. All of the ease of path of least resistance was through the short side. We haven't seen this very much, all shorts. We've seen all longs many, many times. And in the crazy market that we've had over the last 6 weeks, we've seen some longs and some shorts, but never have we seen just a full day where the AI is basically telling you, look, I'm only interested in going short. I don't have emotions. I don't trade on emotions. I only trade on statistical probability. So if you want to use me as a tool to try and watch what the big picture is happening in the market here, what I'm telling you is either sit on your hands if you don't like going short, but don't be trying to go long, because you're probably going to be really fighting a lot of headwinds. And one more thing I want to make of note, well, 2 more things. The first was the risk on and risk off. For those that don't know, risk off is this column right here, and this is the value of when Holly exits the trade. So everything being the same today, knocking on resistance, if we look up here in the main window, it's a 60-minute hold time, so a 60-minute time stop. So what happens is on risk on, all of these, it looks like that was a timed exit, that was a timed exit, that was a timed, that was a timed. This one was a stop hit. We'll come back to that one. And then the other 2, Holly exited the trade citing reduced risk, which means the trade's just not doing what the AI expected to. Time is decaying. Rather than ride this thing down and risk a stop out, the AI decided to just cut the trade under the reduced risk category. And so these risk offs are the reasons for each exit. And the risk off column shows you the total points gained or lost on one share of stock that Holly triggered. The risk on, however, is what happens if we hold on to these positions into the close. Well, typically we've always talked about risk on, with longs to see if the longs can finish the day. Well, today was one of the first days where risk on to the short side really showed itself and showed the benefit of looking up here, right here, and seeing risk on was the on button, showing that there's more. If I toggle back and forth, you can see the risk off was 63 cents, basically after 60 minutes of each one of those triggers and hold times. But the fact the market kept getting weaker throughout the day, the Dow was down almost 750 at one point. Risk on certainly was the way to go, meaning, let's see if we can get some more juice out of this trade. Thank you for the idea on the entry, Holly, but if the market's continuing to go to fresh lows, why do I want to get out here if I'm participating in one of these? So that was my other observation. Directional bias was saying short was the only way really to be today. Risk on was telling us, hey, getting in a short and staying in a short was probably more beneficial and profitable and fruitful than getting out quickly. If the opposite was true, then the risk off flag would have been flying and showing us that quick ins, quick outs were better. And then lastly, I'm just going to go through a few of these quickly, one by one. Every single one is a short. And I know somebody at the beginning had a question about, entries and exits. It's all painted out here for you on the chart. The blue line is the AI entry. The arrow is pointing down, signifying that this was our entry point right here, that blue line. The red line up here is our stop on the chart, and the green line, the target, is even lower, but you could see that on the daily chart. And so what we get is a nice, breakdown of what our parameters of risk reward are here. Well, what I want to highlight, and I'm going to go through a few of these charts. And guys, we're all humans, and we've been participating in this bull market where you buy the dip all day long, or you even buy the breakout all day long. Well, what I want to convey to you is one of the things I think Holly's biggest value is helping us train our eyes and our brain to look to different types of entries. And today was probably the best example I've seen in a while. All of these entries knocking on resistance, they're one simple strategy, and it's basically a fade strategy. If you don't know what a fade strategy is, look at this chart. Here's the market. The stock opened up. GameStop rallied up, rallied up, rallied up, and then it pushed even higher in that third candle, and that is where the sell was. It was looking at yesterday's high. The AI was looking at yesterday's high right there and said, this is a fade. We think that the AI thinks that this particular move is going to run into some stumbling blocks and might be a good short. So what my point is these are the kind of entries that our eyeballs and our brains typically haven't been accustomed to in this giant long bull market. And you know, Sean, myself, Jamie, and Andy, we wrote an ebook. Scott's going to show you a little bit about that ebook at the end here. But these are the things we talk about, you know, fading the rips instead of buying the dips, selling the rips. And so I'm going to quickly go through. I'm going to highlight some of these really good entries, you know, that Holly can be a very good indicator of when it might be time to jump in front of the green candles for a short sale. And it's definitely not one that there is why is the buy indicator? Because that's the cover. That's, David, that's where Holly got out. So short sold here on this tag, and then Holly exited here on the buy tag. So that's why you're seeing a buy. You missed the sell. But what I want to show you is some of these entries. You're just not things that your normal brain is used to seeing. So that was game. Let's take a look at DLTH. Not much going on there, but still, you know, there's the blue line. I don't see many trades above that blue line. That was an interesting place to draw a line in the sand to go short. SWCH. Little bit of pain on that one, never got stopped out. And then towards the end of the day, the risk on obviously kicked into gear and worked. EC, this one was not the good one. This was the only one of the many that didn't, basically kind of jumped in too soon. Here was our sell entry on that blue line on the chart right there. But as you can see, it blew right through it and stopped out rather quick. But as it is sometimes, the price does reverse and pull back into the range. But we always tell people, if Holly hits the stop, you know, don't ask questions. It's all about risk management. That's what's going to keep you guys alive in this game, is keeping track of your risk management and not doubling down and not getting lackadaisical and sloppy with your risk management. But the remaining three here are some pretty good entries. Look at that, just nailed this entry. Sold off on the open, came back up, tried to tick to a new high, and AI said, nope. Statistics are going to say that this is probably not going to be a good long trade here. Let's go short. That one actually worked out pretty well. Second to the last one. This was the actual buy tick right here on the arrow. Again, the arrow is showing us the candle. The sell tag and the blue line gives us the entry. So there was a quick in and then a quick pullback. The stock moved up, and then it eventually pulled back down towards the end of the day. So risk off, you know, only gave us a flat zero value because Holly covered the trade for a flat in her account. But at the end of the day, that trade, if it was still on, it never got stopped out. It did start to produce some alpha towards there. And let's see this last entry. How was this again? Interesting. This is a new issue, only 4 days of data, yet the AI kind of nailed that entry perfectly. So that's the reason I just ticked through a bunch of these charts quickly, is I wanted to orient and familiarize, you know, when we have fading strategies like selling strength or knocking on resistance, Holly's going to wait for the price action to move up to a level and then say, this is where the sellers are probably going to start to come in. And this is the type of trade that I truly feel is really going to be a benefit to traders going forward if the market, you know, continues to be a seller's volatile market. Does that make sense over there, Sean? Am I speaking gibberish?
No, it makes a lot of sense. And you know, one thing I noticed today, and I feel like this is the first time I've seen this since I don't want to say we've peaked with the market. I don't want to say the bull market is over for sure, but at least since this new regime came in around February 1st, and we've been haven't seen new highs since. I feel like this is the first down day we've had where risk on for Holly outperformed a risk off.
Yeah. Today was a very unusual day, and I feel like this was probably one of the best days yet of 2018 to illustrate big picture and small picture, directional bias, trade count, things like that. I mean, the AI was, I hope the AI was keeping people out of trouble that just felt the urge to go long.
That's kind of an ominous thing too, if you think about it, because in the past we've had some pretty ugly down days, as you can see on the chart you've got up right now. I mean, in early February, those were some ugly red candles, and even just
With volume.
last week we had some ugly red candles. But I felt like on those days, Holly, um, the risk off was always outperforming because it was, while the market was down, it was still
Volatile.
choppy,
Quick in, quick
right?
outs hits. Yeah.
Right.
Today we had some follow through to the downside. We have not seen a lot of follow through to the downside on
Right.
the
So that's
AI.
kind of scary. That's kind of
It's
scary if you're long.
it's scary if you're a permabull. Yeah. It should be eye opening and maybe thought provoking if you're a permabull and you want to start saying, okay, do I need to maybe retool or rethink how I want to do this? Do I need to pull back a little bit in my risk appetite? Because this was a different day for sure, Sean.
Yep.
All right, my friend. Well, I'm going to send it back over to you and let you finish us up here on some concepts of maybe taking Holly into a longer term type of charts. All right.
All right. Send it back.
Send it back over. Here it comes.
All right. Show my screen. There we go. All right. Well, I thought we would talk today. Steve just did a great available to the public for over 2 years now. And one thing that has really stuck out for us, began sticking out for us, is that Holly, the signals that she gets into, they're also great for swing traders, because the catalyst that got Holly into the trade in the first place, and the catalyst could be anything. It could be maybe a surge in volume, or a key price level was broken, or any typical thing that's under the hood that Holly detected. Well, those catalysts don't just expire at 4 p.m. Eastern when the market closes. That's just an artificial constraint we've placed on the program. Those catalysts oftentimes can power a move in a stock that could last for several days, or maybe even several weeks if you're lucky. And if I move my webpage off of here real quick, if you notice when we cycle through stocks, I'm going to just go through some different tickers here. I'll just pick up some random ones here, like say Twitter. I got a daily chart up here. Let's blow this up. And you'll see all the past Holly entries listed on the chart, and particularly one like this, where on December 1st, Holly got into a trade. And if you got into this with a swing trader's perspective and putting on an appropriate stop loss and positioning your size properly, you could have had a really nice run in this stock that lasted 2 or 3 weeks. So that looks to me, back of the envelope math here, looks like about a 40% gain. No, that's not right. 25% gain in 3 weeks time. Those are the types of wins that can make a month and make a year for some trading accounts. And so we decided to roll out kind of like a little newsletter. It's a free newsletter. Anybody can follow me on Twitter and get updates. And we put together a model portfolio where we're following stocks that Holly gets into, and trying to build some momentum strategies around it. So let me, I apologize, my screen is not set up properly. Here we go. Now I got today's trades at Holly. I've made it a best practice for myself to, every day when the market closes, I go into my platform and I look at the Holly trades, and I use today's trades as a jumping off point, kind of like a machine generated watch list for me to start perusing through these charts and see if I see anything on a longer term time frame that looks appealing to me from a swing trading perspective. Now, my bias is to swing trade to the long side. I like the risk reward ratios on long swing trades better than I do short swing trades, for a lot of reasons, which we won't fully get into here. So today probably doesn't offer me a whole lot of stocks to look at, but if I go back in history real quick, and I do, maybe if I look back a week's time, I could go back to, that's last Monday, the 26th. I could see all the trades that Holly did, and I could sort these by long trades, and I could start cycling through all the different charts that may or may not look appealing to me on a downside. Now today, I went through this process a few hours ago, and there were 3 charts that I'll pull up right now that looked interesting to me from a swing trader's perspective. We'll start with USG. This was a stock I looked at. Now, this is kind of an unusual chart pattern. We had a nice strong uptrend up until February when volatility came in, and this stock got caught up in the new volatility regime just like everybody else. But a couple weeks ago, had an earnings report that was very well received, and we just gapped right back up to the top of this range. Now, me as a swing trader, I'm thinking, well, heck, if the market likes what this stock is offering, and as long as the general stock market doesn't blow up from here, this stock looks to me like a great candidate for higher gains. And if I were looking to buy this stock today, or maybe at tomorrow's open, I think I've got some pretty clear levels here. Let me put up my crosshairs. I got some pretty good levels of where to manage my position. So looks like the trade closed out at 39.40 today. I might want to look to get into this thing tomorrow at the open, hopefully around that price. And I would probably look to put a stop loss right around here, 38.50 or so. Because if we close below this, the first day of that gap, well, we got a long vacuum here that needs to be filled. And I don't want to be a part of that.
No.
So to me, it's a pretty obvious place to where to place a stop loss. And I would position, or I'd size my position such that if I was wrong and my stop loss did get hit, then my position would only impact maybe 2% of my equity. And everyone's got their own rules of thumb for that. But for me, 2% seems to be the number that I can sleep with at night. But this is a trade I liked. I ultimately didn't pick it for today's entry, but it's still on my radar, and it's going to be for the next few days. And who knows if the market finds some footing, and if this stock still holds these levels, it might be a candidate in the next few days. I'll pull up another one, GCO. This is another stock I looked at. I liked it because, I mean, here's a stock that it's got a market cap of $808 million. It's got average daily volume of 400,000 shares. Not huge, but certainly not small. But I love how this stock has trended up for the last 6 months or so. A little bit of choppiness back in the fall, but most part trending up pretty nicely. And then it's been consolidating here for the last, what's that, 5 weeks or so, 5-6 weeks. And given the backdrop of what's been going on in the market for the past month, seeing price action like this is pretty eye-opening. Tells me that there are some people who are accumulating this stock, some big players who don't want to see it go lower.
Yeah.
And so this is a stock that, I mean, heck, I might want to place a little price alert up here, and if it breaks above 41 and change, could be a great opportunity for a swing trade. And again, I'm finding stocks like this thanks to Holly, and you'll notice Holly in the last 2 months, she's gotten into this thing 3 times, on three separate occasions. She's identified some bullish catalysts to get into this stock, and certainly from that first buy, she's done pretty well. These other two have kind of gone sideways, but again, considering the market backdrop we've been in, to me, this is a very bullish looking stock. And if the market can at least put in some kind of temporary low the next few days, and if this stock doesn't get hurt below maybe these levels here, this is on a very short list for a stock I'd like to be long. And finally, the stock that I did end up adding to the portfolio, well, it'll be added at tomorrow's opening price, is the FFBC, First Financial Bancorp. This stock, my reasons for being bullish on it go far beyond just the fact that Holly's into it. Holly sees something here that she likes, and the stock here is up near the high of the range that you can see on this chart. But if you were able to scroll out, unfortunately, we don't have weekly or monthly charts on trade ideas, but
yep.
If you had that available to that, or had that availability to you, you would notice that this stock is at just about $1 below all-time highs, and it is about to break out of what's been a nearly 1.5 year long sideways bull flag on a weekly chart. All very, very bullish patterns. And if this stock can get up just another $1 or $2, I could see this thing really taking off to the races. And this is why I'm going to be adding this to our Holly Hot List portfolio tomorrow. So these are the stocks that I looked at today, and I found these stocks simply by going through the list of trades that Holly has made over the past week. And you could do it daily, you could do it over the past week, you could do it over the last month. It's not about the timing, okay? We're not looking for exact entries here. We're not looking to get the very tick that Holly got into the trade. That's not the goal here. We're trading on a much longer time frame, playing for much larger moves, which gives us a lot more room for error. So If you are interested in swing trading, if you don't have, I mean, you could be interested in swing trading for a number of reasons. Maybe you don't have the available time to sit in front of your computer screen for 7 hours a day and watch and wait for Holly trades to come in. It's very hard for you to day trade. Or maybe just psychologically or philosophically, swing trading makes more sense with you. I mean, whatever the reason, there's no right reason here, but if swing trading is your cup of tea, I would strongly urge you to start thinking of Holly not only as an intraday trading tool, but also as a fantastic engine for generating powerful watch lists for you to keep an eye on for big moves.
Hey, can I jump in? You mentioned if you're looking at the trades today or trades yesterday, the day before, for the people who don't know, Sean, can you show them how to access Holly's trades from the prior days?
Sure. So I am in the Holly window here, and let's just we'll put it to real time. This is what it looks like today. If you logged in, these are the trades that she did, as Steve showed us before, all short. It's a clean sweep on the short side today. But if you wanted to see the history, if you wanted to go back in time and see trades that Holly did, there's a couple things you could do. You could right click, go to history. You could go to today, but we're already seeing today. We could go to the previous trading day, and this will show us all the trades that happened on Friday. Or you know what? It's weird because we had a market holiday, so that's probably why there's nothing showing here. Friday, the market was closed. Normally, this would show you the previous day's trading. I don't know why it doesn't do that. Bad example. But you could also pick the time frame that you'd like, or any specific days. By going to time frame, you can go, let's say you want to look at, I don't know, Thursday's trades from last week. I could just go back to March, what was it, March 29th, and March 29th here, and click OK. And this is going to show me all the trades that she did on March 29th, which was last Thursday. And you can go back as far as, correct me if I'm wrong, Steve, I think we can go back about 3 months of trading data.
As much trading data as in there. It could be 64 days. It could be a little less. I'm not sure.
Let's go. Yeah, it looks like 62 days. I think that's as far as we can go back. So that's 3 months of trading days.
Yeah.
Yeah.
All right, I want to address a question, Raul. This is a great segue because this week's trade of the week is GE, and guess where it was found? It was found doing the exact same thing that Sean is talking about. There was a buy tag on GE last week. Yes, it's in a horrible, ugly downtrend, but the idea was to wait if we had a market bounce and we had some supportive buying today. There's a very strong pivot level there at 14. So the idea was generated by putting it on my watch list. Holly saw something, probably a lot of volume. That big green candle day was the day when the market was having trouble, I think, and so there was a relative strength in there. But all it did was put it on the radar. It doesn't mean jump in and buy it. We need to get this thing to clear back above that high 3 days ago at 14. And so I'm going to talk more about this tomorrow. I don't want to get too much into it today, but it kind of dovetails with exactly what Sean was talking about. The trade of the week, the origin here was looking for a possible oversold bounce in GE, as Holly did see something. Now, I'm looking forward to answering the next comment. Your choice for the pick of the week, says Raul, there is talk there will be an analyst downgrade. I don't want to sound flip, but I do not give one iota about that at all, Raul. Analysts are not traders. Typically, they're working on the other side of the sell side desk to get people to come in, and many times they can be wonderful contrarian indicators. I welcome a downgrade. Come on in and downgrade this thing. But if this thing trades back above 14, your downgrade means shit, okay? CFOs lie, CEOs lie, and analysts don't know what the hell they're talking about. They're looking in the rear view mirror of fundamentals. We're trying to stay on the cutting edge of technology and technical analysis here. So it's kind of a passionate subject for me. You could probably tell in the tone of my voice, but I don't give a rat's ass what analysts think, or even if they're threatening to come out and downgrade a stock. I mean, scroll out, Sean. You're going to downgrade the stock now after how many months? I mean, come on.
Preach, brother, preach.
No, seriously, now you're going to downgrade this thing. Where were you at 30? God almighty. All right. So I'll have more to say about that GE call tomorrow in the trade of the week segment tomorrow, but that's all that I had to chime in with. And anything else you have to add to, Sean, that would be great.
I better take the mic back before Steve gets a call from his doctor to monitor his blood pressure. Anyway, there's a quick question here I wanted to address for Gabs in here. He says he doesn't see the history option when he clicks in the Holly trades. The very simple answer for that is because you are not running one of our latest beta versions of the software. Very simply, if you'd like to have this feature, just make sure you're downloading the latest version of Trade Ideas, and I'll show you where you can do that on our website right here. Just go to trade-ideas.com. Click on the products tab here at the top of the page. And it's, of course, my computer is going slow for some reason, but now that we're here, scroll down a little bit. First, you're going to see the option to download our production version, which is probably what you have right now. Very tempting to download that, but skip that. Keep going, and there we go. Download the newest public TI Pro beta version. Just go ahead and click download and follow the on-screen instructions, and you will very easily be able to download the platform, and don't worry about losing any of your layouts or anything in your cloud. That stuff is all backed up. Everything's good to go. You're just going to have the new version of software with all the latest bells and whistles, including history for Holly.
All right.
Oh, you know what? One final thing, just to wrap up the talk about the Holly for swing trading. If anyone is interested in following the trades that we do in this Holly hot list portfolio, you could follow me on medium.com at Chicago Sean. You can see right there, just highlighted at medium.com/@ChicagoSean. At Chicago Sean is my Twitter handle. You could also follow me on Twitter, where I tweet about these trades as well. And, you know, we do a couple blog posts a week with new trades. And this was what you're looking at here was my recent quarterly update that I just published last night to wrap up this first quarter. So feel free to enjoy that and get more information about swing trading with Holly.
All right, good stuff. Well, let's get you on the road, Sean, so you can do that Denver meetup. Why don't you put the slides back up, and Scott can kind of talk us out. And I think he's got some goodies to show people in terms of promo codes. And there you go. Just yeah, present and skip a couple. I think it'll be the ebook you're going to start on, and Scott will take it from there.
There we go.
Yeah, thanks, y'all. We have a nice ebook that is very timely. Just go to tradeideas.com/ebook and put in your email and download it. Sean and Steve participated in writing the book, and it's really good to have these 5 strategies in your trader's toolbox for when the market gets weird, like it's now, and you can't
doing now.
And then we also have a podcast. We skipped last Friday, but there will be a new one up this coming Friday. And you just need to search for Trade Ideas Podcast and whatever podcatcher you use to listen to your podcasts in. And make sure you're subscribed. We have a code. Use code SPRINGSWING, all caps, just like it is on the screen. And you can also download these slides if you'd like to spend a little more time with them. Just go to the handouts panel on your GoToWebinar interface, click on the blue handouts link, and then do all the things, you know, like apply Spring Swing, all caps, just like you see it on your screen on checkout, saves 15% off your first month or year of Trade Ideas. You can also use this to upgrade from standard to premium. So if you go to log in on the homepage, in the upper right on the homepage, and go to your account management section, click on change my subscription, just apply the code. It takes the same discount off of your first installment of premium upgrade. We'll have a recording of this up later on tonight or tomorrow morning. You'll get an email reminder tomorrow about how to find it on the playlist on our YouTube channel. Just shoot us an email to info@trade-ideas.com if you have any questions. You can also follow Steve Gomez at Today Trader on Twitter. Sean is at Chicago Sean, Dan Merkins, Trade Ideas 1, Jamie Hodges, QuantBot. Find us on Facebook, Trade Ideas Pro on Facebook, and then like our page so that you can share everything we post with all your followers. And we won't sell your data because we don't have an app on Facebook.
Scott, we haven't deleted Facebook yet?
No, it's still good for this. Anyways, we'll have the recording up later on tonight or tomorrow. Safe travels, Sean, and have a good one, Steve. Talk to you all later.
All right. Thank you. Bye-bye. See you tomorrow.
Take care, everybody. See you later.